Good morning, everyone. My name is Isaiah Singleton with the Atlanta Voice. I am here to introduce Miss Indirah Gutierrez. She's a community manager with JPMorgan Chase. And today we're talking about credit and holiday budgeting. So, hello, how are you?
Good. How are you, Isaiah?
I'm well.
Thank you for having me.
Thank you for coming. So, let's jump straight into it. What do we mean by good credit, and why is that important to have good credit?
Oh, so important. I always think of credit, it's a key. It's a tool, right? And that tool helps you unlock home ownership, elevating your business, your maybe long-term financial goals, right? And there is such a thing as good credit, right? A lot of times we have the misconception or the association that, credit can be bad, right? But I always say it's all dependent on how you utilize it, right? And having that knowledge behind it is key. It's so important. And what is good credit, right? I like to think of, we use an analogy, or we use like an acronym, which is PUNCH, right? So that's like a step to help have good credit, right? And improve your credit score as well. So the P in PUNCH is payments. You got to make your payments on time. And I'm not just talking about credit payments or credit card payments, just payments in general, right? Like pay your rent on time, pay your utilities on time, right? All of that goes into effect on just making those payments. Your payments is almost half of your percentage when it comes to your credit score. So it's a huge chunk. So you got to make those payments on time. The U in PUNCH acronym is utilization. So you want to try your best not to overfill those cards, right? Especially around the holidays, holiday budgeting, right? Like you mentioned, it's key to not have the tendency to want to utilize those cards or overfill them, right? And try your best to stay below 30% of your limit. So if your credit card limit's 1,000, you take 30% of that would be 300. So you want to try not to carry 300 month to month because that fills up your utilization. So whatever your limit is, take 30% of that, and that kind of gives you that percentage, right? N is new credit, right? So we want to build credit, we want to have credit, but we also want to be very mindful, very cutesy, okay, very demure. I'm gonna throw it in there. Okay. Very mindful of where you're applying to, right? Everyone offers a card now. Everyone has these incentives, or they kind of, I want to say they hook you in the sense of, you're at the store, you're paying, you're at the checkout, and they're like, hey, if you apply today, we'll give you 20% off, whether you're approved or not. Yes, okay, you may get that discount, but what are your long-term goals? And how is that going to impact you? And also, what are the fees associated with that card, right? You want to do your research. So that N in PUNCH, that new credit, be mindful. Do you need it? Is it a need, or is it just I want the discount, right? Or do I even shop at the store, right? Do I even come here? The C in PUNCH, that's your credit mix. So that's the mix of credit that you have. A lot of the times we think, well, I don't have credit. I'm not going to have credit, so therefore I'm going to have good credit. No. You still have to have credit, right? You still have to have the ability to use it and show how responsible you are. And then lastly is the H. That's your history. So try your best to keep your longest standing account open if possible, right? So I love that acronym. I feel like that's a really good breakdown on how to improve your credit, but also how to build it, right? If you're just starting out, that's a good key that I like to use with our participants in our workshops.
That's interesting because I've never heard of PUNCH, and thank you for that because that helps me as well. So thank you for that. I'm pretty sure our audience definitely will be grateful for that information. So my next question for you is, how is the credit score calculated, and what factors influence it?
So honestly, PUNCH. So it's a great acronym, but it's also a great way to figure out how your credit score is calculated, right? Like I said, most of your score, I would say almost half, is your payments. Just making payments on time, that's going to have one of the biggest impacts. Again, utilization. Are you filling your cards, or are you, keeping them at good balance? Because I've seen the two extremes. I've seen the people that are like, I have credit cards and I'm not going to touch them, I'm not going to use them. But then that's not really going to help them build credit over time, especially if they're new or rebuilding their credit and they're starting out. It's not really going to help if you don't use it at all, right? And then I've seen the other extreme where we're tempted, or maybe, you know, we fall into that of, you know, overfilling our card, right? So almost find a medium, or use the card, right? But make sure that we're paying it off or making payments on time. And then again, going back to having that mix of credit and having that history. When I say, for me, credit, it takes time. You know, a lot of times we may have the thought of, okay, I'm going to start right now, and 6 months from now, I'm going to be, you know, at this high credit score of 800, right? Because usually that score, the range is, it can be anywhere from 300 all the way up to 850 or even plus now. And where you fall in that range flows. And I always say, honestly, it depends to where you are in life, like what journey you are in life. I've seen people go up, down, go back up. And for me, the beauty of credit, and even your credit scores, you can always rebuild it, you know, and you have the ability to, even if you take a dip, you can always rebuild it up. Or if you completely, you know, fall off with your credit, I've seen people rebuild it. You know, I've seen people over the years declare bankruptcy, and then years later, like 10 years later, they have 800 credit scores. So it is possible, and there's a beauty in being able to rebuild. But just having the acronym, right, using that punch method, and being mindful of how you're utilizing it.
So with that being said, credit obviously takes time to rebuild. So how can people avoid overspending or being tempted to use too many credit cards during the holiday season?
So important, especially over the holidays. I think, you know, we get into that. I want to love on the people that I love, right? And a lot of the times we hold that monetary value to that, and it's not about that, right? So I think budgeting, and I know we have a whole episode on budgeting coming out, so stay tuned for that, and that gives you great tips on building that budget for the holidays. But as far as the credit and not having the temptation, I always say, if you don't have it, you shouldn't be charging it on cards, you know? And not only that, but think of other ways to show the people that you love them, right? Whether it's through experiences, whether it's through, you know, maybe taking them to their favorite place, or, you know, doing something from the heart versus just, okay, I'm going to charge my card and put myself in debt to be able to show them I love them, you know? And I think it goes back to that budgeting, right? Giving yourself that budget of, okay, I'm going to give myself X amount to buy, or X amount per person, you know, make that list of who you want to purchase for, and be mindful of it, and stay true to it. You know, if I say I'm going to spend X amount on this person, you know, try to stay at that amount or below. But not have the temptation to just charge your card and, you know...
worry about it later.
And worry about it later. Because the reality is, it's not... I think a lot of and I've seen this, right? Where I think we have the tendency to say, okay, I'll charge it now and I'll think about it later, come January or come February. But guess what? That bill is going to come to you. Guilty. You know? Yeah. Guilty. So it's going to come back to you. So, and being aware of that, right? And not just say, well, I'll spend it now and then, you know, worry about it later because I want to, you know, show the people I love them, or buy these maybe extravagant things. At the end of the day, those that love you are going to love you for you, not what you get for them. Yeah.
Right, and you're right, because people think around that time, you know, spend, when you could just do something creative, or spend time with that person, or plan a trip together, or something like that, something that's manageable. So, yeah. Exactly.
There's so many creative ways now. I mean, social media is, I think, one of the biggest, like, avenues of that, where you can find, like, you know, how to do something on a, you know, low budget, right? Or how to do something on the creative side, right? So many different things. I mean, I've done stuff where I'm like, hey, I'm going to clean out my mom's garage. This is something that she's been wanting to do.
She probably wanted that.
For a long time. Yeah, she can't do it herself, you know, physically. This is something I can gift her, or be one of her gifts, right?
It's still in the spirit of giving.
And it's in the spirit of giving, and it's free. And you know, it takes time out of my schedule, but this is something where I don't really have to allocate so much money for that, right?
So what are some common misconceptions about credit scores?
Oh my gosh, there's so many. There's so many, and I hear so many out there when I'm in the community. And I love my role, and I love what I do with JPMorgan Chase, because the whole point of our role is to be out there to educate, be a resource and a tool for the community, but also to debunk a lot of these myths that exist sometimes in our communities. One of the big ones that I've seen is your income impacts your credit. And that's so not true. I've seen people with, low income have amazing credit scores, and vice versa. I've seen people that have great income, high income, and they don't have the best credit scores. Nowhere in that PUNCH acronym, or nowhere in your factors of what determines your credit score is their income. Income is not tied to your credit score. And I think that's one of the biggest misconceptions, that people think, no, well, I have to make a certain amount to have good credit. Absolutely not. It's all dependent on how responsible you are and how you utilize your credit. Another one that I've seen a lot is, if you check your credit score, it affects your credit score. I've heard that before. People think, oh, but if I check it, my points are going to go down. Absolutely not. We have so many tools out there to be able to check your credit score, and it's free. And it does not have a direct impact on your score. Another one that I've seen a lot, and this one's one of the frustrating ones for me, because I'm like, no, that's not true, is if you carry a balance, it's going to help you build good credit. No, it's going to put you in debt. it's going to have you it'll actually, it can negatively impact your credit score, right? Because you're going to have a higher utilization rate. And then you're going to have to pay it back, but I've heard that out there. They're like, oh, no, you need to open a cart and, carry a balance on it. Absolutely not, right? We want you to make great financial decisions as clients, and we want you to pay your cards, not just, fill them. So those are a lot of common ones that I've seen out there. And just a lot of misconceptions. And I think the biggest thing with misconceptions is, you don't know what you don't know. But if you stay in the not knowing, you're never going to progress, right? So there's so many tools out there. Chase has so many tools on our webpage around credit building, our financial health workshops that we host for the community here in Atlanta. Great options. I'm one of 4 community managers here in Atlanta, and we all host sessions throughout Atlanta to learn more about these resources, right? And have this education. And I'm seeing more strides, right? In the school system. I know growing up for myself, that wasn't a topic that was talked about. Right. But now I'm starting to see that shift and change. And also, hey, there's so many resources as well that you can kind of look into through online. And like I said, Chase has great options as well. We have Credit Journey. I'll throw that out there. Chase Credit Journey, you don't have to be a Chase customer. Even if you're not one of our customers, you can utilize Credit Journey. It's a digital tool that we have where you can check your credit score. Not only that, but it gives you tips. So it shows you, hey, this is where you are, and this is where you can be. And this is how you can get there, right? And it even has simulators on there. Hey, if I make this big purchase, let's say I go get this car, for example, how is that going to impact my score? So it shows you these, or if I pay this off, how is that going to impact my score? So we have this great tool to be able to use as well.
Not switching gears, but like we talked about good credit and what is good credit. Can you tell someone could you get into how that score would be if it's good, and what that score would be if it's bad, and what should people avoid?
Yeah, absolutely. So good credit, right? We usually, we're from ATL, okay? And here in ATL, my community manager team and myself, we like to say keep it 700. The phrase keep it 100, we say keep it 700. So we try to stay 700 and up. That's you're really gonna see the difference once you get to the 700s and up, because you're in that good to excellent credit score, right? It ranges from 300 to 850. Usually 3 to the 400 or 500s, not the best, right? You're in that low, bad credit score place. That 500 to 600, 660 is still, it's still on the lower side. It's fair, but really once you hit that 700 and up, you're in that good, and 800 and up to excellent. So credit, and I love to give this analogy because I do it all the time in my workshops. Credit itself measures how responsible you are. Okay. And I give the analogy of, let's say you have two friends, Isaiah, right? One friend, super responsible. Like, this is like your ride or die friend. This is the friend that, you can call them up and they're going to answer the phone. Or you're going to call them and, hey, I'm moving. I need some help. They'll be like, I got you. I'll be there. Right. Then you have the other friend. Maybe they're the one that's always late. Maybe they're the one that, you call them and they don't pick up. Or, you say, hey, I have this going on. Can you be there for me? They're like, yeah, I'll be there. I'll try my best. And then they don't show up or they ghost you. Right. And let's say these two friends ask you to borrow money. Now, you may say, I wouldn't let either one of them borrow money, and that's okay. You may say, I'm good. I don't want either one. I wouldn't let. But for the analogy purpose, right? You probably are more likely to let the friend that you've maybe known the longest or you have this good relationship with borrow money, right? Versus the other friend who's not, maybe you just met him, or again, not most responsible. You let them borrow money, you may never...
You're not going to see it again.
Right. You may say bye to that money. You may be like, oh, good luck, right? So this is what credit is to banks and lenders, right? We want to be that good, responsible friend when it comes to our credit and credit score. Okay, that's one of the easiest breakdowns that I love giving, because I feel like we can all relate to that good friend or not the greatest, most responsible friend. So we want to try to be that good friend. And the way we're that good friend is when it comes to our scoring. But again, those factors that impact the score are so important. So why is it important? We say, okay, so all right, I'm going to do all these things, right? Do all these factors, do the punch method. But what does it matter? Why? So I can just be like, yeah, I have great credit. The reason why is that score impacts the opportunities that you're going to have down the line. When it comes to home ownership, when it comes to maybe you have a business and you say, hey, I want a business loan one day. I want to have my own restaurant one day, or I want to have, my own building one day. You're going to need probably a business loan unless you can pay for it cash, right? Or even a vehicle, or whatever long-term goal that you have. It's a lot of the times it's going to be tied to credit. So what I see a lot, and this is another misconception, is I see people sometimes say, well, I just won't have credit and then I'll have good credit. Or they wait, which is a misconception. Or they wait and say, oh, I'll just wait up until I'm ready to buy a house and then I want to start working on my credit. But then what happens is, that credit score impacts a lot of times the rate that you're going to have. So generally, the better the credit score you have, usually the lower the rate that you're going to have in interest, and vice versa. The lower the credit score that you have, generally the higher interest you're going to be paying on loans, lines of credit, mortgages. So that is the key right there. When it comes to your credit score, it opens up the opportunity for you to pay lower interest. We're both two people, but let's say you have an amazing credit score and I don't, and we both apply for, let's say, a home loan, you may have a better rate than I do. So I'm going to pay so much more in fees and interest over time versus you who has a great credit score. That's really, it opens up that door, but also the door to generational wealth, right? Which is so important in our communities as well, right? Building that generational wealth and setting our families up for success, our kids up for success, so important. But it starts with us, and it starts with credit and having a good relationship with it.
Now, what are some do's and don'ts when building credit and monitoring credit as well? Yeah,
so some do's is, first, check where you are. I see sometimes people just avoid even checking because they're like, I don't even want to know where I'm at. I don't want to look at it.
I feel that though. In a way, I feel that.
Yeah.
But it is important to check your credit.
It is, and listen, I get it, right? I get that sometimes, and we talked about the holiday budgeting, right? And I see so many people around January, February, they're kind of like this because they're scared to look at their credit or their credit score because they've overused or overspent their credit, right? So important to check. You don't know where you want to be unless you know where you are right now. Period. That's not that's the truth. So you need to know where you're at now. And again, Credit Journey is a great tool, and I know there's so many credit tools, digital tools out there where you can check your score. So a big do, know where you are, check your credit. Another big do, again, we go back to the payments. You gotta pay stuff on time, as best as you can. Another do, if you're maybe in a situation where, hey, I'm having a difficult time, I'm going through, a rough financial time, ask for help. I think a lot of the times people avoid asking for help, or maybe there's some type of maybe embarrassment or something where they're like, no, I don't want to ask. So I just, I'm going to miss a bunch of payments, or I'm going to get, eaten by, let's say late fees, right? Ask for help, right? A lot of the times lenders are wanting to help, right? Banks will want to help and see what options there are, what alternatives there are for help, right? So I want to throw that in there too, because I've seen that a lot where people avoid or they wait by the time it's too late. Right. Like by the time you're in, let's say, a collections or something far worse, right? So asking for help is so important. Another do is start. That's one of the biggest things. Like, in order to have credit or good credit, you got to start somewhere. I wish there was a way for you to just magically start and then, okay, here you go, you have an 800 credit score. It takes time, and it is a game of inches a lot of the time with credit. So you got to start somewhere. It takes time. It honestly can take years. It's not going to be something that happens overnight, but the most important thing is to start and not be scared of it. Be scared of the not knowing, but don't be scared of the doing. If you equip yourself with the right resources and the education behind it, you shouldn't be scared of it, right? But if you're just applying for things at random and you really don't know what you're doing, then that's a problem. That's when you start running into the don'ts. Yeah. That's a big don't. Don't just accept something without knowing it. Don't not do your research, right? You got to do your research for it. Don't just, I'll check it later, or I'll pay it later, So those are huge don'ts, right? For me as well. And don't be scared. There's people out there to help. We have, community managers to help out there, give those resources and education. We have amazing branches, amazing bankers out there that you can sit with and talk with and see, what's the best card for you? Because again, we have all types of cards. There are all types of credit cards out there. There's ones that are for travel. There's ones that give you points. There's ones, that give you cash back. What's the best option for Isaiah? What's best for Isaiah may not be best for me, right? But that's the reality is do that research and don't shy away from it.
That's crazy because you talk about doing your research and asking for help. And what I realize is, even with myself, sometimes it's hard to ask for help. And sometimes it's hard to be aware of where you stand and being afraid of that unknown. So that was a really good point of asking for help and not being afraid to ask for help. So I really do love that piece of advice for myself.
Yeah, I love that. And I always say, life is lifing sometimes, and we all experience something I think we never thought we would experience, a whole pandemic. Yeah. Right? None of us thought we would experience. I never did, right? Either, yeah. And during that time, there were a lot of people that shied away from help or, had medical emergencies or were in, difficult financial positions during that time. A lot of people closed their businesses during that time. So, again, asking for that help and knowing that, we don't want to see people, at least I never want to see people fail. I only want to see people do well and grow, right? So know that we're all human and life lives. Life lives all the time. And you may be in a situation where you do need to ask for help or, again, rebuild, right? Because I've seen so many people say, oh, I experienced this or I went through bankruptcy. I'm never going to have good credit. No, I've seen it. I've seen people completely rebuild it. It takes time.
I'm saying it's possible. It just takes time.
It takes time and it takes effort, right? It's not going to, I wish I could give someone a magic, okay, it's solved. You have to be intentional about it and you have to put action behind it. And if you're able to do that, it's beautiful. It's like life. We all can rebuild and we all can start over at any time.
But it just takes time, effort, and financial discipline.
Yes, absolutely.
Yes. So how can digital tools help individuals manage and improve their credit?
Yeah. So again, so many tools. I mentioned Chase Credit Journey already, and I'm going to mention it again because personally I love utilizing it. This is, again, something that we have out there that Chase has on our page. You just look up Chase Credit Journey, and whether you bank with us or not. So the amazing thing is we have this tool out there, whether you don't, even if you don't bank with us, you can still utilize it. And I know there's a bunch of other ones out there as well that have alerts. They show you, where your credit score is, where it can be. They have simulators. Now I love this because back when I first started building credit, like, this was not a thing. There weren't all these digital tools. It was almost like credit was this like thing that existed, but like people didn't really know how it worked. And now we have those tools, we have the resources to say, no, this is the breakdown, this is how it works. And again, Chase Credit Journey and these digital tools show it to you. They'll show you, hey, you're spending all on this, or if you pay this down, it'll actually help you boost your score or improve it. So it gives you all these tips. Not only that, but a lot of times, again, you can check your credit report as well. So I like to say, so there's two different things. So I'll break that down for you and for the audience as well. We have our credit score and we have the credit report. And I say they're sisters, they're cousins, but they're not the same thing. They're two different things. Your score, again, it's that 3-digit number, that range. It shows it to you, right? Your report, I say, is like your report card for those of us, that are either in school or already, went through school or have kids in school. That's your report card. It's like your transcript. It shows you all your activity. It shows you everything you apply for. It shows, your history. Whether you're approved or not, it's going to show up on there. So if I go apply, for a credit card, it's going to show up on that reporting. So important to check that report as well. A lot of people forget about the report. Or they just don't know it exists. And it's so, from a fraud standpoint, it's important to check just to make sure, hey, there's nothing on there that's not mine, that I didn't authorize. And then also just to see your record, right? And see what's going on your reporting. So that's like your transcript that shows all your payments. It shows that you're on track and your history. And your score, that's that digital, that 3-digit number that you see. And I say that's like your GPA, right? So you got your report card, you got your GPA, easy ways to kind of remember it and break it down.
Okay. Did you have anything else to add?
Yeah, no, I think my biggest thing to add is going back to the, in order to get where you want to be, don't be afraid, don't be scared, and know that we have these tools and resources to help. Again, for me, credit is a tool and it's a key. And if you utilize it right, it can open up so many doors for you. Again, doors of homeownership, business, your future financial goals. It opens it up, but you're the one that has to take the act. You have the key in your hand. That's the way I see it. Credit is key, and you have that key in your hand. And what you do with it is really upon you. But know that we're here to help. We have the education out there and those resources. But again, taking action and don't be scared, right? And that's the biggest thing, knowing to not be scared and put action behind your intention. Yeah.
So what I've gotten from that is, don't be scared.
Yes.
Please check your credit score. And don't be afraid to ask for help. Well, thank you so much, Indirah. This was so nice to have a conversation about credit. If you didn't have anything else to add, I thank you guys so much for indulging us in this conversation. I'm Isaiah Singleton with the Atlanta Voice, and have a great day.
Thank you. Thank you, Isaiah.